Hey everybody, Gary with Basecamp Trading. Take a look at some continuation trades that we were trading in crude today. You see this morning crude was in a downtrend, making lower highs, lower lows. And then you had a 30-minute trend reversal breakout right here. You had a pivot, higher pivot low, broke to a higher pivot high. This bar caused the 5 and the 13 to cross to the upside, and crude continued to work its way higher. Now, most of this was taking place during the London session, but it set the tone for a bullish bias in the US session. And that's how we ended up trading this. We had this really strong push to the upside. You had this doji right here, left this bottoming tail. Next bar was a really bullish bar, opened at the bottom, closed at the top, causing the 5 and 13 to cross to the upside. Followed up by yet another really bullish bar, opened at the bottom, closed at the top, and above key resistance. We know that the 50 EMA and the 200 EMA are significant on the 30-minute chart. Closed above it, you can see push back under it, bounced off the 5 EMA, closed back above key resistance, and set up this continuation doji. Right here at this point, this doji could have been a reversal doji back to the downside if it had triggered underneath, because the high of this doji was higher than the high of the previous bar. If this next bar had opened right there and then triggered to the downside, that would have actually triggered a reversal doji back to the downside. What it ended up doing was just triggering a continuation doji to the upside, and crude just continued to push higher. We got right here up against the 200 EMA. Again, we know the 200 is always significant support and resistance, just like the 50. We were hitting significantly overvalued on the value charts at that time. And again, we know we hit significantly overvalued. We usually expect one of three things. We're either going to pull back, we're going to consolidate, or we're going to reverse. Most of the time, we pull back a little and consolidate kind of together is most of the time what we do. This was no exception. Next bar opened up, pushed up against the 200, rejected, pulled back to the 5, and basically just kind of pulled back and consolidated. You can see it just finished in a doji, setting up the bull flag. The next bar triggers the bull flag. This was our continuation bar right here, the bull flag bar. We pulled back, relieved our overbought condition, no longer significantly overvalued. We're back down here underneath the significantly overvalued red zone. We set up the bull flag. Next bar triggers it to the upside. And once again, you can see went into significantly overvalued. Left a bit of a topping tail and then followed up by another bullish bar. Crude continued to push higher. We got on this bar right here and actually hit significantly overvalued on our 240-minute chart. You can see right here the 240-minute chart in crude on this bar right there. This is where that bar pushed up, and you can see we hit significantly overvalued on the 240s. You know that when we hit significantly overvalued on the 240-minute chart that we are typically not trading long in that direction anymore. And crude did, set up a couple bull flags, a couple even triggered, a little push higher, but for the most part, that was pretty much it to the long side in crude for the day. As is most of the time, our primary trading chart is our Unirenko chart. We take our signals off of our anchor chart, the 30-minute chart, and then we manage them off our Unirenko chart so we can get lower risk entries. And you can see right there is when crude was trending down in the overnight. You're making lower highs, lower lows. Came up here, we made a pivot. Wasn't a higher pivot high. Then we put in a higher pivot low, and then we triggered the trend reversal breakout to the upside. And then right in here is where that continuation doji was setting up in crude. Right there, we had that wick off the 18, triggered the continuation doji. That was good for 3 targets to the upside, or $300 per contract. Then we hit significantly overvalued. That was that bar that we hit significantly overvalued on a 30-minute chart. Pulled back, set up the bull flag. The bull flag triggered as we were actually breaking this power line right there. But we had a nice slow line zero touch off the 34, so we were able to enter off of that. Nice momentum reset. All of our moving averages in alignment. Slow line zero touch, getting ready to trigger the bull flag. So we were able to take this as our regular Unirenko entry in anticipation of the bull flag triggering. It was good for another $300 per contract, potentially to the upside. And then that's where crude hit significantly overvalued again. And you can see we had a couple of continuation trades if you wanted to take them. Actually took these with much smaller position. These were just some little one contract positions off the 50 SMA. And then we hit significantly overvalued on the 240s right in here. And then that definitely was it for crude for the rest of the day. And we had a couple of trades that pushed higher, but for the most part, that was it for crude. So again, we hit significantly overvalued on the 240s. We typically are not looking to trade in that direction anymore, even though you had a trade or two that you could have hit a target or two. Typically, we're done trading in that direction once we get overvalued on the 240s. So again, some pretty decent continuation trades in crude. Had the trend reversal breakout, triggered the bull flag, triggered another bull flag, triggered the continuation doji, triggered a bull flag, and a couple more continuation trades in crude oil this morning.